Hello and welcome to this episode of Technology Heroes Unplugged at Capital Club Dubai, where in this episode we'll be discussing why would you build a digital bank in 2020. It's my pleasure therefore to welcome our three guests who are all leaders in their respective fields as banking strategists and technologists. They are Yuri Misnik, the Group Chief Technology Officer of First Abu Dhabi Bank, MENA, Paolo Barbesino, an SVP and Head of Multi-Channel Banking at Emirates NBD, and Rafik Majiti, the Executive Vice President and Head of Digital Retail Banking Group at Mashreq Bank. Welcome to all of you, and it's a pleasure to have you with us today. If I can just set the scene then in terms of why we felt this would be a great topic to talk about on building a digital bank in 2020. It's quite evident if you just look at the headlines today that Amazon and Reliance in India are making the headlines on who's going to control a very lucrative e-commerce market in India. And Jeff Bezos has certainly stepped forward on that front. And then if you look at the dominance of big tech in all other markets, Google last week had to sit down with the regulators in America as they began to talk about antitrust and other such behaviors in America. So big tech clearly continue to be relevant to the dialogue. But one of the reasons that all of us are very cognizant of how banking has been influenced in the last couple of years is neo-challenger banks in the UK like Monzo, Starling and Revolut, who increasingly lately have come under the microscope where their valuations have been questioned. We've all seen how Monzo, with some of its challenges on revenue and particularly its dependence on the interchange paradigm, has seen its valuation flutter in the last few months. And then you look at Revolut, who are doing extremely well in terms of pushing the scale of their customer base to 13 million and also driving a considerable profit now for the first time. But they are burning a lot of cash as they ramp up and increase their overall organization structure. And then you've got Starling, 1.2 million customers, quietly hopping along in the UK, looking at the SME market, but perhaps not making the other incumbents think that this could be a threat. Now, at the same time, when you begin looking at banking globally, you cannot miss how JP Morgan only a few weeks ago reported record profits as $9.4 billion was reported for what they'd achieved, where trading revenues were definitely a big factor in some of the results they produced. And then we come into our region in MENA, where in the last month, many of the regulators have been approached not just by new incumbents looking to set up digital banks in Saudi or the UAE, but ADQ in Abu Dhabi announced last week that they're going to set up a new digital bank with about $525 million of initial capital and make a foray into digital banking. So with all that said, I'd like to turn to you, Yuri, for the first question, which is another superstar of fintechs and challengers where TransferWise has been able to set up shop somewhere back in 2011-12, had more than 8 years to build up a customer base of almost 8 million customers, pushing revenues north of 300 million, and established that digital does work as you begin to simplify a particular customer journey. In their case, it was money transfers. So Yuri, how do you yourself see the opportunity beginning to play out for how digital banking could develop and evolve in the region?
Thanks, Naveed, and great to be here again. I think it's my second session here. Look, I think when we're talking about the digital banking, we need to start understanding what digital banking is and sort of go back a little bit to the beginning. And what is actually selling and how do you try to make money out of it? And I think there's some questions which we'll discuss later today. But effectively, in my head, there are two ways you attract customers into digital banking. One is the engagement angle, right? So you come up and you say, okay, I'm offering something really, really exciting, really cool. And Monzo, to some degree, was playing this engagement angle, right? Where they were offering normal banking, but with a bit of a coolness on top of it, right? But I do believe that in this case, like how sustainable the engagement model is, right? So if you start building the bank, which is fundamentally driving the customer engagement only, will you be able to compete? And when you start actually adding the overall risk factor, overall cost of capital, cost of risk, cost of compliance and regulatory, will it actually be sustainable? The second angle is an enablement angle, right? And if you think about the digital players, other digital players, and TransferWise for me is actually an enablement player. Square is an enablement player, right? When they came up and started doing something really, really interesting to they're starting enabling somebody, some business sort of segment, whereas SMBs, whether it's retail, or enabling a particular journey. That's much more sustainable. But if you think about TransferWise is not a bank, right? So, and if you think about most of the enablement players, they try to, as much as possible to stay away from the core banking. They're trying to offer you sort of this layer of experiences and enablement on top of something else. Well, whether it's going to be competitive or not, potentially, there is always a play to disruption there, and there's always a wedge. So Anderson Horowitz liked this idea of like, do you find a wedge where you would find a narrow problem which you can solve and be completely disrupted there. So if coming back to the original question of how the regional digital bank ecosystem will develop, I think that there are two ways of doing it. I think we obviously have a huge number of banks in UAE, two probably large number for sustainable, profitable existence within a very limited population. So I think that there will be banks who will manufacture products, and this is something that's been in the industry for a while. Banks will carry the book, carry the cost of risk, regulatory compliance, etc. And I think there will be a few of them, and they will price their products accordingly to make sure that they get money on them. And there will be digital banks, the banks who will actually digital players who distribute these products, whether they distribute the payments ecosystem, whether they distribute the experiences, etc. And they will make money on other things. They will make money on, well, potentially, the ads. They can make money on partnerships with other retail offerings, etc., etc. So similar how your digital players, Facebook, Google, etc., make money out of customers' screen time. So I think that's a play. So are we going to see more digital banks sustainably created? I don't know. Doubt it, right? But is there a play for sort of digital experience players? Of course. Is there a play for enablement? Of course. Is there a play for traditional banks like FIB, for example, or NBD or Mashreq to offer great digital experiences? Absolutely.
Great. Well, I think last time when you were with us, we spoke about focusing on what's not going to change in banking. So giving that particular point about what's not going to change in banking and the opportunity on experience that Yuri spoke about, Paolo, how do you see the opportunity for digital banking evolving in the region?
Well, I think going back to what Yuri is saying, I think that we have clearly to understand that there is one way of doing banking that is like being on the side of being a pipe, okay? And there is another side of doing this that where you want to be the interface. You want to be just like managing the relationship with the customer. And digitalization is bringing in a clear separation between the pipe side, and the interface side. So there's like what some analysts do call it as a great unbundling, okay? So the idea that you completely unbundle the banking experience and you create like many verticals where you may need a banking license, you may not even need a banking license. And where you can find players, there are vertical players that are very strong on doing that and only that. TransferWise being a case in point, but it's not the only one. Square is another case in point if you look at digital payments. You can think about like wealth management. They are just like digital players that only do that. You can also think about risk. They are just like players that do have a better risk scoring than banks. The question is how you rebundle or you combine these components in a way, first of all, what you want to do, and on which side you want to do. Do you want to be on the side of the pipe? What are your core competences that will allow you to build something that will survive the many challenges of the digital age? And on the other side is whether you want to stay on the side of the interface. Can you really compete? Is your brand top of mind? It's like building a brand is a little bit more complicated than saying I do a super app with like 5% or less than 5% of mind share, okay? And the question is how you combine the different components to serve customers that have perhaps a very different understanding of what a bank is. I mean, and this is also part of like what the market conditions and regulation plays quite a crucial point in this. So what customers think. So if you think about like the European Union with the latest wave of regulations from PSD2 to GDPR, there's like the clear wave of saying we want to empower customers. We want to make sure the bank understand that the money that sits in their account is not the bank's money, it's the customer money. And they entirely reshuffle the banking experience, but ground up, by just like going back to the point of saying, is the customer storing money somewhere? And this is like not done by banks that envision a bright future or big business opportunities. It's done by the regulators. So regulators are shaping what you can do in a specific geography by telling you what is possible, what is not possible, what you can try to do, okay? And in this space, you can just like play with these building blocks that now are becoming available because of technology in a way that were not so easy to do that. So when you think about digital banking, if I decide to start a digital bank, and I wonder why I should start a digital bank in Europe where I run at PA multiples that are below 10%, below 10, yeah? So why should I do this? But I would focus on solving problems in a way where banking, assuming that banking is already unbundled, that I can have savings products that are coming from a fintech that is doing some arbitrage across the European Union, and I can compete with the likes of ING, what ING Direct did in the past. I can offer a better interest rate, or I can integrate TransferWise to make payments. If I look at here, there is a big difference. So if you compare the fundamentals of banking, you see that if just like think about the value of the revenue per customer of a UAE customer, retail customer, is pretty much like nearly 3 times what would be in the UK. So here we run at approximately 6,000 AD per customer. And in the UK, you take a bank like Lloyds, they will run at 2,000. Take new banks, average revenue per customer, 70 AD, 70, 100, okay? So what do you do here? And it's interesting that here you have like these customers that have, they bring you more revenues to banks. They have twice as much deposits as in average in Europe. But for instance, but you see that, for instance, in this country, you have a lot of wealth that is produced by retail customers that is leaving the country. So here you have a clear problem that you may want to solve. I don't think you can build a Revolut in this country where you make money on interchange fees. You can do it, but it's like if you have 25 other countries, and it's one of the countries that you have. If you really want to build a sustainable bank, you have to understand what is the problem that you want to solve, and you have to understand what is the framework, the regulatory framework that will allow you to build what you want to do.
So I heard lots of things from you. We're going to talk about ING Direct only in a minute, but it's clear that the regulator is going to play a key role. It's clear that transparency and security need to be looked at much more. Transparency is very key. But the value point you made is extremely important on what are we going to do by building a digital bank? How are we going to add value and permanence in consumers' lives? Which takes us to hopefully not the ING Direct example.
No,
Rafik,
no,
everyone
no.
knows you were once with ING.
Yeah.
You're now at Mashreq Bank and you head up retail digital banking there.
Yeah.
What's your view on how digital banking could evolve in the region?
Yeah. Yeah, my view is pretty similar to what the gentlemen were saying, but to start with, banks will always be there, right? Because banks are important from a government perspective, from a financial stability perspective. There will always be licensed bank and it will always be regulated by the government, right? So not everyone can just start a bank tomorrow. If you say that, then you have to choose indeed as a bank, what will your strategy be, right? So what my opinion is, as a bank, you should be ready to play all the games out there. And you have to take into account that people are not looking for banking. People are looking to do other things than banking. As a bank, you need to know your position and where you are. People like to do shopping, booking holidays. SMEs like to do trading. So my opinion about the future of banking in this region is about playing that game and be there where your customers are. And there is an example of ING, not ING Direct, but there is an example of ING in Germany with Amazon, right? Amazon is a platform where a lot of SMEs are doing their business, right? And they need to be financed. And what Amazon could have done is apply for a banking license and then give that lending to those SMEs. What they did, they signed up with ING, where an SME that is doing his trading on Amazon can directly apply for a loan from the Amazon portal, and it will flow directly into the systems of ING for the credit scoring. And that means that for ING, they have the same products, but they have an extra sales channel, right? And I believe we as Mashreq are doing pretty much the same thing. We just announced a collaboration, a strategic partnership with Noon 2 weeks ago. And what we're doing there is pretty much the same. With Noon. What we're doing with Noon is great in e-commerce, in building the experience. People are shopping, but once they are shopping and they want to pay, they need a credit card to pay with, right? Why would we sell our credit cards only via our own channels? If you can do a partnership with Noon saying, guys, let's do a co-branded Noon card that can be applied for via the Noon platform, then we connect to Noon, the credit card comes to us, right? And we send back the credit card details that can be immediately used for shopping in the Noon wallet, right? So my view on banking is...
Physical credit card or a soft credit card?
It is both. It is if you want a physical card, you can opt for a physical card and it will be sent to you by a courier. If you want only your CVV code and the virtual card, you only get that, right? And it will be pushed to Noon directly. So my view, not about Mashreq or specifically, but these are just examples of where I think banking is going. And you don't need to know where it's going exactly, but as long as you know that you as a position as a bank is secured because you're licensed, you have to be able to play that game of being where your customers are and to take into account that customers are not looking for banking. Customers are looking for other things as well. So that would be my answer.
Can I add just a little bit, right? I think sort of coming back to the question, like what would you be are you going to build would you be interested in building a digital bank? I think it's a very similar question you can ask yourself. In the modern world, would you be interested in opening a new telco? Right? If you believe you can find a way to open and compete and sell a new telco provider, right? Maybe UAE is a special, but there's not that many of them, but go into Europe. Then maybe you'll be able to find a way to sell sort of the digital banking thing. And the second thing I want to make is, if I were building a digital bank, I would not target retail. I would go into SMB space, where it's massive. It's a $400 billion opportunity in the market, and it's massively untouched. There's lots of things you can do around experience, enablement, etc. That would be an interesting play.
I think it's clear there's an opportunity. I think I've heard the why. I've heard the particular point you made on SMB, regulators, value, and your point was more lifestyle, relevance to how we all understand how banking becomes part of our lives. Which takes me to one example that caught me off guard. I didn't see TikTok happening until it had happened. Okay, so 500 million customers a month, and I still don't know quite what it does, but it's pretty impressive the customer growth it's achieved. Now, I know, Paolo, this question for you is one based on the fact that you were with UniCredit. We're all being very transparent. National Australia Bank, UniCredit, ING, and ENBD now for yourself. You were in Russia and you lived in Russia as, I believe, Tinkoff was beginning to take off. And we all heard how last week Yandex didn't quite make the transaction to go ahead and acquire Tinkoff. But as a digital-only bank, leaving aside the segment that it focuses on, and given the fact that in Russia, physical validation is key to KYC. You have to show ID physically for you to open and become a known customer. How do you see digital driving the paradigm, given that we've clearly established it's successful in driving new margins, new businesses? How do you see digital, though, becoming more of a customer growth debate, the TikToks of the world, or potentially there needs to be a proper book of business as well, i.e. profit?
If you look at some of the digital banks in Europe, the neobanks, I'm thinking about like perhaps a couple, that had like a staggering growth over the last year, over the last 18 months, you may think this is about growth. And then at some point they will solve the problem of squaring their P&L. I think that there is instead a different way of building digital banking that starts from the idea of making sustainable growth. That is, and there are I would say there are just like indeed opportunities. Though I think that we have the analogy that Yuri was putting on the table with the telco industry is quite telling. There are many similarities between how the telco industry evolved, say, over the last 15 years. And I put that data of a watershed, 2007.
Yeah.
2007 is like when the idea that by being the pipe you can control the interface, and all of a sudden you have like over-the-top players that completely destroy the fundamentals of telco. Think about the revenues coming from SMS. Think about like the prepaid business that was like a cash cow, and think about telcos today. And think about like now, if you think about like, shall I start a telco, or shall I start? Is this a traditional operator, or is a mobile network operator, or is a virtual mobile network operator? Do I need the infrastructure, or do I need to manage the relationship? So this,
or do I manage the content on top of the whole thing,
content.
right? Which is very different.
That's the point. This is the kind of transformation that you see happening in banking, with particularly where regulators are pushing this. Like you see it happening in Europe, you see it happening in the UK, you see it happening in Singapore, you see it happening in Hong Kong, where regulators are, and now in Indonesia, where regulators are thinking about building this kind of model. So if you think about this, you may think about like, yeah, it's still sustainable, but you may think about fundamentals that are very different. They're completely different than the
different because of how local markets are behaving with the number of banked, or different because of the average revenue per head that a customer is
driving? Actually, perhaps profit margin that will change significantly. Look at telcos and.
So we'll come back to the telco analogy, Paolo, again.
We'll keep using it all the time.
Yeah, I think what I'm hearing is that we're heading for a standardization of banking similar to telco potentially.
Commodification?
Or charges becoming similar across the board?
Yeah, then you have to see what will happen with regulators. So in Europe, think about like the end of roaming within the European Union. Bam. WhatsApp on top and flat data plan.
But I think like if we're differentiating on chargers, right? That's a very, very bad model. If you're saying that I'm competing with Mashako NBD on who charges more for transfer, that's not sustainable. Yeah, it's like it's a race to the bottom.
But that's your point about experience.
We can talk more. I mean, I don't want to steal the conversation, but yeah.
Okay. All right. So I'm going to turn then after Paolo. Thank you, Paolo. Rafik.
Yeah.
Same question to you. So is the debate now with digital all about, increasingly, given the focus on neobanks in the UK, about customer growth, acquisition, or profit?
Yeah. I think it's pretty simple as well, right? You can grow with customers, but the profit has to come somewhere in time, right? And I think digital is a great enabler to work on sustainable growth, right? I think digital does like 3 things to help you with sustainable growth. First of all, with digital and digital sales capabilities and using data, you can pretty much pinpoint what customers you want, because not every customer will be profitable or beneficial for a bank, right? With using data, external data, internal data, you can much better target the right customer that you want. So digital sales capabilities is a very important piece that will bring banks sustainable growth. That's the first piece of digital, so digital sales capabilities. The second piece is digital is also helping you because of APIs, microservices, AI, artificial intelligence, robotization. You can really lower your cost base, right? So there's much less, operational costs in serving a customer. You can sell your products more easily digitally than via your sales force or your branches. So that will lower your cost base as a bank. That's the second piece. And the third piece is the experience piece. In the past, banks would compete with each other only on interest rates or fees. And I believe the point is there now that the banks have to step up and say, why can't we compete on experience, what other companies are also doing? And I think digital gives you a great opportunity, right, to build an experience which is as good as any experience that you would have with any big tech company. Why is opening an account still such a pain? Why is applying for a credit card still so difficult and so much paper? Why does a mortgage application still requires a pile of paper? So I think digital will also help there. So I believe in sustainable growth. Customer acquisition is important, but only if it's the right customer as well. And that's what you see, the analog that you're using with other banks that are growing really fast but are loss-making. I don't think that's the direction. So use digital in those three elements. So digital sales, improving the experience, and lower your cost base. And I think there is enough space then to come to sustainable growth.
So you see relevance to both?
Yes,
okay,
for sure.
So Yuri, yourself?
I want to add a bit of cynicism to this.
Okay, go ahead.
I think I will start with the question: why do you want to build a digital bank? What's the purpose of this stuff? And probably you want to build it to, well, unless you are Jeff Bezos and you believe in this sort of universally transforming and transition and sort of completely disrupting the banking system, you build it to, have an exit strategy, right? So you want to find some multiple and either, go to IPO or, sell it effectively. And if you look at the current valuations, look at the current PE industry, what are they buying? They're buying users. Why are they buying users? They're buying users because of, screen time. Wonderful movie on Netflix, Social Dilemma. It's very clear. I mean, I would not necessarily agree with everything we just said, but generally it's right. So they're buying screen time. They're buying experiences. So effectively, and if you're building digital bank, most probably you are sitting in the retail space right now. And the retail space has retail margins. And I don't believe that the regulatory and compliance and all the stuff which we're loading into banking today can survive on retail margins. You need much more. So effectively, if your strategy is and drive customer growth, drive acquisitions, but figure out how to start selling essentially screen time, right? Whether it's a partnership with ads, whether it's cross-sell, etc., then I do believe that the customer growth is possible, and you can actually drive through customer growth. If you want to build something sustainable, right, then you have to figure out either how to low down the cost of all this undifferentiated stuff which you have to deal with, right? In this case, but you have to learn how to live on retail margins, which is super, super hard in banking. So you have to choose one or the other. I don't think anyone figured out how to do both.
So, well, what would you say is relevant, though?
What do I say? What?
The growth or profit?
Depending on what you want to achieve.
Okay, so it's the why.
Yeah.
Why do you want to
Yeah.
build a digital bank?
Yeah.
And that drives
If you want to have a nice exit out of your digital bank, growth is fundamental because its growth is priced much, much higher than the profits. Think of multiples.
All right, well, that is a nice segue to the next question, Rafik, for yourself from Yuri. So I kind of believe we're in no doubt that the why is relevant and that both customer growth and profit remain relevant in how you build a book of business, i.e. you're monetizing the product you're creating. But the question is also, as we see apps become the channel of choice for all consumers, and it's well known that there's been 350% growth in the usage of financial apps. How do you see the paradigm of customer acquisition itself, which is a bit more of a granular question, becoming relevant for banks? So how do they go after customers where we know what the costs of acquisition and conversion are? How do you see that playing out yourself in the region?
Yeah, I believe the customer acquisition, like digital customer acquisition, we know that it's 3 times, 4 times lower than physical acquisition. So it's clear that with these thin margins that are there, that the game that needs to be played is digital acquisition. And I already tapped into that before, but digital acquisition, you can do it that really targeted, right? With using the right data, using your marketing tools in the right way, you can target customers really well. And digital is the only way, in my opinion, when it comes to digital acquisition. Not in all the segments. Of course, in the high net worth, in the big corporate markets, it will not happen only digital, but in the retail banking, clearly, if you want to acquire customers, you need to do it digitally. And that needs to be an app, or it needs to be a website, or it needs to be a partner ecosystem that you can plug into, is, for me, not the most relevant question. It is about the journey. And I think, and what do I mean by the journey? A lot of customers today come to websites, start an application for a product, and drop off somewhere in time, right? I think the focus should not be only on driving people to the top of your funnel, about coming to your website or to your app, but what happens after that? And if you look and if you dive into that, which we did, and you look at how many customers leave their phone number, get their OTP, and then leave and not coming back anymore, I think if you optimize your funnel only based on the traffic that you're generating and make it a really enjoyable experience to open an account, to open a credit card, to do a mortgage or a loan, I think there is a lot to gain still to make sure that this funnel of getting your customers to your digital funnel and then making sure that they leave once they have the product is a very big opportunity. So when it comes to acquisition, digital for sure. If you want to still physically acquire your customers in retail banking, this is not the age to do that. And we have seen in the last couple of months our digital acquisition really growing really fast. And we never imagined that digital would be like 80% of all your new account openings would be digital. So I think there is a big opportunity, and I fully believe in this digital acquisition.
Okay, great. So just building on that then, Paolo, if I take the same question to you. Now, you're a seasoned banker. You know what the average cost of acquisition is relative to revenue per client, much better than me. But the reported numbers that analysts share with us are that the average cost per customer is on average $6 to $7 per customer, again, relative to banking revenue. And the cost of conversion is almost $23 to $25 per customer. So when banks end up reporting as neo challenges, particularly in the UK, revenues of no more than 30 to 40 to 50 odd dollars per customer, how do you see that equation beginning to play out for more customer acquisition?
Well, I think that when you acquire, say, unlike traditional banking, where you start a relationship with a bank, I think about like as I'm sufficiently old for reminding how I started my traditional banking experience,
You're
relationship
not old, for the record.
that you go to a bank that is most likely your parents' bank or your grandparent or something that is like, and you start like something that is like face to face. And the idea is that the guy sitting on the other side knows that the guy they will sell first an account, and then they will sell at some point a credit card. At some point they may sell you a loan. You start working, and then you just like have some savings. They will try and sell you some saving and investment products. At some point you will buy. You get married. You buy a home. You may need a mortgage. And eventually you stay with the bank for a big part of your life. Think about what you get. What is the typical customer that you get online? It's by definition a much more informed customer. I mean, it's a click away from finding a better offer. And the example of ING in Europe, I mean, is like they enter in markets, like they grew market share very quickly, but customers, the minute a different player had a better offer, they switched. And they have flows going back and forth, different accounts. So you don't with this customer acquisition cost, you don't get actually a customer. You sell an account, period. You're not building a long-lasting relationship. You're only selling a product. And what you have to do is then turn this into a relationship. It's not so easy. I mean, look at the average deposit on or average balance on a neobank account. It's like peanuts, okay? It's like a bunch of secondary customers. So if you are just like a traditional bank, you have a problem that you have like perhaps you have 10 times the balance or 20 times the balance of or even more than a neobank, but you have a cost income that is like 60% plus. That will kill your profitability. You are a digital bank. You have, instead of a balance, you have just like a fraction, a share of wallet that is negligible. The majority of customers do have another bank account, and perhaps another bank account, plus I have a card with another. Then they have like, by definition, if they are digital, they may have a robo-advisor, or they may invest somewhere else. So it's the idea that the digital customer, the new banking customer is fragmented, is unbundled itself by definition. So they will buy products from different vendors. And it's not because I'm TransferWise that I can sell investments. I can resell investments. If I am Revolut or I'm number 26, I do transfer with TransferWise. But the idea that you have like a 100% share wallet, it's gone. Forget about this. This is like digital has killed this idea. if you want to go to a place where there is no internet and build a relationship with a bank and go to a branch. But this is gone. This is completely gone. And new consumers are coming, and it's like you see, they come, they look at this, then they are just like say traditional legacy banks. They decide, okay, this is the new world of digital, so let's open let's get digital. And then what happens? Well, if they're not lucky, they have the cost income of a traditional bank and the balance of a digital bank. You put them together, and you see whether they're not sustainable. Europe is full of banks that tried hard to have digital players that did not survive, despite they were very efficient at acquiring customers. You can go down to $1 to acquire a customer if you know how to leverage the data. Is that $1 worth?
I actually agree. I think we should redefine what acquisition is, because I agree in terms of, especially if the generation changes. Right now, if you see people like young people, 20s, millennials, right? They install app tomorrow, right? And right now, to open a bank account, what do you need? A phone number, an OTP, and that's it. Does it mean that I acquired a customer?
But can I
No.
build on what you just said? So what could they have been more cognizant of?
So the problem, I think, which is exactly what point is how I would actually start thinking acquisition of how many profitable products you actually manage, how many relationship products you manage to build into this, or at least things which will make you money. And the problem which I see, Australia, UK happened the same stuff. They focused on, get an app installed. They followed the TikTok model, right? The more app I have, the more impressions I have, etc. Well, they didn't realize that for TikTok, the cost of a new app is nothing, right? And every ad which I show to you effectively gives me profit,
exactly.
almost no cost.
Their business model
Right,
is
the
advertising.
cost of the cost of the digital customer in the bank is actually quite high.
Yeah.
For me, to run this stuff, and they have to risk models, and they have to do KYC refresh, and all that stuff there. So they wanted the model which TikTok is, but they didn't realize that they're running with a cost of not a traditional bank, but of a sort of traditional regulated bit.
I would like to add one thing indeed. It only starts when you acquire a customer. So if the definition of acquiring a customer is opening this account and getting his first details and let him install an app, that's only the start, right? You haven't achieved anything yet when that customer installs the app for the first time. The question is, how often does this customer transact with you, right? So I always look at the model, acquire, transact, and engage, right? So acquire a customer, make sure that he uses your products, and you don't have to build every product yourself. So you have TransferWise. Why can't we collaborate with TransferWise or any other quick remit kind of solution, fintech, to plug that into your platform, right? So if you get the customer to transact, you will collect much more data about this customer. You know what he likes and what he doesn't like. You know what he buys and what he doesn't buy. And then you can start engaging. And engaging is about relevant interactions with the customer. Right? We know exactly what happens on your account on a monthly basis. Why can't we predict what your balance will be in a month from now? Why can't we tell you upfront to say, by the way, we see this and this and this, and then you can be relevant for a customer, and this customer will come back. And then you don't have to cross-sell, but the customer will cross-buy your products, right? If you are at the right moment with the right offer, the customer will ask for a loan or a credit card. You don't have to push for it if you use engagement in the right way.
Can I add one thing? I think sort of to some degree in add to it, right? So there's a very interesting bank in Ukraine, which I don't want to advertise, but we looked at it, and and what they do is that and there's a different model there. There's almost no credit.
This is the Momo. What's the name? The black card.
No, not the black one, but
not the black one. Okay.
But I don't want to go into but my point is that, the whole thing which they've done is that and essentially there's no credit. They sell pretty much, a card with an account, right? And then maybe a little bit of credit on top, but they created the massive coolness factor around the brand. They swag, they do it the same way as, any other digital brand will do it. They'll send you a sticker. They have the whole Facebook full of people who I got an account there, I make a selfie with it, etc., etc. So they somehow figured out how to engage the younger generation with to create the cool factor, right? I don't use it because, I don't use this bank because it offers me another savings account. I use it because it's cool, because they got avatars there when you want to play. They They have award points, the gamification all over the place, et cetera, et cetera. This is something which I think if you solve it, then the acquisition becomes like, that's how you can actually play the story of, how do you drive profit, drive engagement, et cetera, rather than just trying to sell mortgage or a credit.
There is
you wanna
something
add
that
more?
you have to bear in mind when you look at also the customer acquisition cost in this country. Bear in mind that here you don't, I said that it's difficult that you acquire a customer. You acquire a bit of a share wallet. In this country, by definition, you acquired a customer that is already multi-banked because everybody has an account back in their own country. And the question when you look at the share wallet is not only the share wallet between my bank here in the UAE against one of those gentlemen's bank. It's also about like the share wallet that my bank has compared to the bank in the country of origin. Because when you look at financially the customer from an overall point of view, you see that the share wallet is like very, very, very much just like scatter across this different geographies. Again, based on the regulation, because it's based on taxation. So you may have like, you may come from a very from geographies with high taxation, but you still have like some reasons to have an account there. You may have a mortgage there. You may have like perhaps some investments there. You may get money. You are paid here, but then you may have investments in a say more tax-friendly geography, no? And then when you look at say what you're getting me, if you get me as a customer, are you getting me as like as a current account customer, and you make money on the interchange fees on my card, and then you are happy because you make forex revenues because I transfer money either to back home or to Singapore or to I don't know the Channel Islands or wherever. So this is the kind of, and here is particularly, is much stronger here than if you think about Europe. Everybody is like born in a country, works in a country, and the internal migration is very limited. But if you think about the peculiarities of the banking customer base in this country, you see that there's like a huge amount of challenges and a huge amount of opportunities. So talking about just like simply minimizing the cost of the customer acquisition cost, I think will not just like give the full picture of what we need to consider.
But let me do this now, because I know we've almost killed this one a few times on customer acquisition all around the globe in different markets. I want to turn to a question on big tech. And no, I'm not going to ask you, did you buy Amazon stock 10 years ago? Okay. Did you buy Amazon stock last year?
I worked for Amazon. I had some Amazon stock.
Right. So the question really is about how you just can't get away from the effect of big tech. I mean, 4 of the top big tech are now worth over $1 trillion. All right. We all read the headlines. You're all established leaders in your own right in domains. You all know that Ant Financial has 1.3 billion of financially inclusive customers, and they're making phenomenal business this year in markets they're present in. The question I have really to you, Yuri, if I turn to you first on this one, is are we beginning to see how a geography-based super app is becoming more omnipresent, where banking features become not irrelevant, but smaller in size because the lifestyle becomes more dominant? Or do we believe that banks in markets are going to give big tech a run for their money and prove relevant strategies for building digital capabilities?
It's a great question. We had a little bit of a side chat before this whole thing, and I think we sort of more or less agree. So I don't think you'll hear a big diversity in opinion on this one.
We can catch up with time then.
Yeah. But look, first of all, actually, I had Amazon stock and I sold Amazon stock. That's a bad story, right?
The question is when did you
Not at the right time. But so what I would say on the super app, I really like what, for example, and I'm not sure if it's possible in any other country rather than Russia, but I really like what Sberbank did, right? When they sort of transferred them into they changed the brand, and now they sort of, let's say, having some advantages in the home country, they accumulated quite a large ecosystem of different businesses. They do taxis, they do food delivery, they do shopping, they do banking as well, then they do sort of some small business, etc. And they are now becoming sort of this super app. But the super app is not driven by banking, it's driven by everything else, which is lifestyle experience. If you think about Ant or WeChat and the whole sort of economy around WeChat, again, it's not driven by the fact that WeChat is a bank. It's driven by you spend time there, your engagement with it, and then you plug financial services into it. So I, to be honest, would rather be a financial services platform, which I plug into whatever experience app exists, or whatever experience apps exist, right? Many of them, to provide services, whether it's like payment services, whether it's planning, inventory management, I don't know, accounting stuff, etc. Right? So I would rather power the super app than be a super app, because I don't believe that. Actually, like I say, banking is not
A need.
a need, exactly. So I don't go to my banking app because it's actually a need.
It is a need. It's not.
It's not something which I do normally,
yeah,
right?
Yeah.
I don't go to my banking app because I just really want to check my balance. Like, I wish I had enough there to do it all the time. But like, honestly, that's the point. So I would think that this ecosystem will be driven by experiences and engagement apps, TikToks, Facebooks, I don't know, lifestyle apps, rather than banking, and banking will plug into that. Maybe this country is actually quite lucky. It could have a situation where a few of these businesses will be owned by sort of a similar, or like either one corporate or multiple groups, etc., where you can plug this in together, so there's more synergies between that. But I do believe it will be driven by experience and lifestyle rather than by financial services.
Okay, great. Well, I think you've been very clear in your opinion on how it's going to evolve. I'm going to turn to you, Paolo, with the same question. Just to put perspective back on Ant Financial that Yuri was talking about, mid-year, $10 billion odd US dollars of revenue, $3 odd billion of profit. How do you see this particular paradigm evolving? Is it going to be big tech and super apps versus potentially banks continuing to hold their own?
It's about, I think we go back to the discussion about the unbundling and being the pipe in the interface. I find it difficult, going back to the point of super apps, I find it difficult to see a super app model working outside of China. Okay, if you look at the example, I mean, in China you have to understand why. I mean, it's like a particular configuration that the Chinese economy and society has, where you have like, you are a customer, you are a consumer, and you are a citizen in a slightly different way than it would be in a Western democracy, where things you clearly see when you look at the way data is used and data is exchanged between public bodies and private bodies. There's the idea of it reaching data in a very, very seamless way to serve customers in a better way, but in a way that it would not be possible in other geographies. You do it within the European Union, you will not be entitled to do what they do. So super apps are just like a very specific model that comes from China. Not even in other, you have something like this now in some other countries in Southeast Asia, where you have like Grab, Gojek that are building this kind of, but it's not as pervasive as WeChat or. If you look in the West, there was an attempt by perhaps WhatsApp that wanted to be the super app of the West. Where did they go? I mean, you use WhatsApp, but it's difficult to build up the kind of relationship that you have with WhatsApp, because it's completely, the user experience is completely built in a very different way.
But I also think identity is missing, right, to some degree, right? And the one thing which you mentioned really well about the fact is you actually have one single identity, something which we have here, right? And ideally, sort of the UAE pass might evolve into something really interesting there, right? But China has identity, which you can share between anyone, and that connects your experience, that actually gives you the opportunity. WhatsApp in Europe, you don't have identity. Everyone is against it. Maybe Scandinavia is one of the examples where it could play. But
okay, so I'm not going to ask you more on particularly nuances of Sesame credit, because that would probably eat into some time to ask Rafik the same question. But we will come back to it. That particular point of knowing you and being familiar with who you are in giving you the choices that you can make. So back to the question on super apps and big tech. How do you see this beginning to shape out in the region? Do you see more super apps beginning to evolve, or do you see that banks will continue to play with this key attribute called trust and be able to drive financial engineering behind that?
Yeah. In my opinion, it's not about the super app only. Super app is really something specific. It's also culturally driven, but ecosystems is something that's going to happen, right? So an ecosystem is a marketplace where people will come together, where they can avail all their services they need, and the players in that ecosystem will at least improve the experience, because you don't have to leave that ecosystem for all kinds of stuff. And I think as a bank, you have to be ready to play both games, right? You have to say, we will invest in our own banking app, because not having a banking app will disqualify you immediately, right? But if you build this app in such a way that your services can also be plugged in into any ecosystem, right, then you don't have to make a choice now. So let's make sure that your technology is able to be plugged in into any super app if it comes, and in any ecosystem, the example that I gave of ING and Noon, etc. So, but I believe also in the retail banking space, it will be really difficult as a bank to become that super app or that lifestyle marketplace or ecosystem. You have to be modest as a bank, and again, people don't like banking, they like to do other stuff, so you have to be there. But in other segments in banking, I see some opportunities and some chances for banks. You talked about the SMB space, small and medium businesses. If you think about a small and medium business that is going to incorporate itself in the UAE, and you see about how many things a business needs to do before they are operational, right? I think there is some room there in building an ecosystem specific for that niche of SMB. Not a super app, but at least one place where you can go to incorporate yourself, to open an account, to get an HR system, to be able to do your salary payments, and all that combined. So it's not a clear yes that there will be a super app, but also not a clear no. But this concept of a super app, of being an ecosystem where different providers come together, will happen.
Well, I think you've all been
The question is, imagine, what if this ecosystem for small business instead is orchestrated instead of a bank by SAP, for instance?
Or Amazon.
Or
I
Amazon.
would actually say Amazon has a more likelihood.
Amazon is more likely.
So
you don't need a bank for this.
So
you need banking services, unbundled.
But that's why you have to be modest with what I'm saying. If Amazon comes to this market and builds this SMB kind of super app, right? How will you be able to compete with Amazon's marketing power, etc.? So you have to be ready to play the same game, not to compete with them, but at least to enable.
I would actually argue a bit differently. I would say there was a nice set of screenshots on the internet. I think they deleted it, but there was a leak from Amazon where they've had an internal page where, if you've seen it, sort of with essentially you get a similar to Amazon page, but for loans, for lending, for small business. So you type, I want a loan for 10 years, X%, etc., and they give you a list, and then you click, and the money is in your account. And essentially they did the proof of concept, etc. If this comes to us, then I think you're right in terms of we need to plug into this. You can become a provider.
Yes.
Right? You are a manufacturer of the loan, you come in. But I don't think we'll be able to compete with this variety of sort of aggregation of different services. Yeah. But it was super cool if it ever comes.
Well, whether it's Amazon or Azure or Google, it's clear big tech will continue to dominate this particular sphere of how potentially a super app may be relevant. I know that some people also believe that it's very geography focused as well, where more Asia-centric in many ways. Now, I'm conscious of time. We're coming towards the end now, where I'd like to really ask you to dig deep into your insights. If I could start by asking you, as we look at the landscape and several players are beginning to look at setting up digital banks, pure digital banks, and you've all brought in many insights already into how you see this being relevant in the market. So I want to start by asking you what your lessons learned really are for digital banking. And I'm going to turn to you, Paolo, with the first question, with a quote from Jack Dorsey, the American technology entrepreneur who's the CEO of Square and also the CEO of Twitter. And his quote is, "Expect the unexpected, and whenever possible, be the unexpected." So when you look back at your learnings and insights in how you've worked at ENBD and driven that focus, around customer growth and profit. What lessons would you say potentially are there for others to be cognizant of as they begin the journey to build a digital bank?
I would
And we have a time restriction here as well.
Okay. I would say try to keep it simple, meaning banks are just like making things very complicated, and they are not capable of coping with complexity.
Yeah.
And what you have to do if you're building a digital bank, you have to reduce the complication and increase the complexity, the capability of managing complexity. That is like understanding that customers will not come to you because you are like your brand. They come to you because their money is sitting there. Because if they want to move their money, they have to come to you. And it's like flipping the way we build we look at the relationship with the customer. It's like putting the customer at the core of this, rather than the product or our product portfolio at the core. And redesigning old processes. I mean, not only for the sake of saving costs, but also for the sake of making things working. This will be perhaps the main suggestion if you want to start a digital bank.
Okay. Yourself, Rafik.
Yeah, looking at the title of the show, we didn't talk about technology a lot. It's called Technology Heroes, but I hear banks and organizations talking about their tech stack and their modern technology that they're using. But I also believe there's a much more important piece, which I call the cultural stack, right? The culture stack. What is the culture in your company? It's clear the world is changing really fast, and just continue what banks have done in the past with big projects and business and technology and writing down requirements and doing big projects and waiting for a year for something to come out will not work. So I was saying about the culture, and the culture should be about agility. You should be ready to change really fast. And agility is, for me, is business and technology need to be really close to each other. And they have to work together to respond to what is happening. And if you don't have that culture of working together as one team toward that goal to improve the customer experience, I think it will be really difficult. So my takeaway would be, make sure that you have a culture where you can adapt to change and changing environments, where it's allowed to make mistakes and to try, because banks are risk averse in nature, right? Because it's money of your customers and you can't make any mistakes, but you have to be able to take a little bit of more risk and to make mistakes as well, to be able to play this game. So for any bank that is coming in this region, or any digital bank or traditional bank, it's not only about your tech stack. It is an important enabler, but much more important is the culture that you have in your organization.
Thank you, Rafik. That's a very significant comment. And I think, Yuri, yourself, your thoughts, please.
I fully agree with what Paolo and Rafik said, but I would add something which I would think should come before thinking the problem and sort of or doing. I think, and this coming back to my sort of experience with Amazon, inside Amazon, sort of the mentality and the approach of working backwards from the customer is, and this is special way of thinking. It's not customer centricity. It's literally working backwards from the problem. I think this is a fundamental to any success in the digital economy, especially in digital banking. So it is, figuring out what customer problem are you trying to solve, rather than, and they're very good. I really like Amazon mechanism of doing it, doing a press release, doing like the root FAQ, and it was quite publicized. Everything is on the internet. But getting through this thinking, understanding, okay, I'm done. What would I tell the market about it? What would I tell the customer about it? Why, if somebody will ask me why I'm doing it, do I have an answer for this? So that type of customer working backwards, I think, is first. And then absolutely culture and everything else comes that.
Well, I mean, culture seems to be a dominant theme that keeps coming up, Rafik and Yuri, in all technology discussions, particularly when we look at this region. Now, you've been very kind in sharing your thoughts and your insights. I'm going to try to summarize your perspectives and your points of view, and please chip in if you feel I left something out that was salient. I think what's quite clear as we look at the horizon ahead, for the evolution of our financial landscape. It's clear that knowing what your why is and why you want to do digital banking is going to continue to play a key role in how the boardroom discussions start. It's clear that knowing the problem you're trying to solve, a bit like TransferWise again, and a bit like how Revolut increasingly is beginning to make progress as well, is going to be relevant. But what I heard clearly from you, Paolo, many times over and over again, is how regulators will play a key role in how customers and citizens are going to be banked in the region. And what I heard from all of you over and over again, back to your what's your why, was how those organizations, as they begin to look at going down the journey of digital banking, who are able to establish what their value is, and what their relevance is to actually being relevant to a consumer touching the screen of their smartphones and beginning to play with their app and buy a product, is going to be relevant to the growth. And that takes you into whether or not interchange paradigms change or not. It's clear that digital itself as a technology stack is going to increasingly make journeys more accessible for many as smartphone usage continues to increase as penetration in the region. But it's clear, though, that big tech cannot be ignored. They will continue to make banking more simpler, scalable, faster, and new technologies will come out that will basically allow banking to become more accessible. But that really takes me on to the fifth point, which would probably be the subject of another discussion with you, which is around data. Okay, listening to the discussion today and the benefit of dialogues with yourselves earlier, it's clear that digital platforms, in all their shape and form, with data, are going to be ubiquitous and increasingly more contextual for driving more engagement with the banked and the unbanked to make them banked. With that, I'd like to thank you, Yuri, yourself, Paolo, Rafik. You've been fantastic guests. Thank you so much for making the time today. I'd like to thank Capital Club also for hosting us tonight. And until next time, I'd like to thank you all for listening and following us. Thank you.